All week, I've been scouring the internet, soaking up data and racking my brain trying to figure out if we are in a bull trap that will turn into a bear market, or if we will experience a significant correction before the continuation of the bull market, or if we have already started the climb to new all-time highs. Hello, I'm Crypto Casey, and welcome to another episode of Last Week Crypto. Every Sunday, we review the performance of the largest cryptocurrencies, top gainers, as well as the latest global news stories affecting the crypto markets this past week. This week, we will discuss why the crypto market may either experience a major correction before hitting new all-time highs, or may be well on its way to new all-time highs without a significant pullback. This week's episode is brought to you by Crypto.com, an exchange with over 100 different cryptocurrencies and over 20 different fiat currencies. On Crypto.com's mobile app, you can buy crypto with bank transfers, credit, debit cards, or crypto at true cost with no markups. They also have a desktop exchange that is solely for crypto-to-crypto trading. If you use the link below to sign up for Crypto.com, you'll receive $25 worth of cryptocurrency for free when you use the referral code CryptoCasey, all while supporting the channel. Also, every Wednesday I conduct a weekly AMA or Ask Me Anything at Instagram.com/CryptoCasey. So use the link to my one and only official Instagram account listed in the description area below to follow me and ask me anything you want every Wednesday. Awesome, it's time for Last Week Crypto. Looking at the top cryptocurrencies by market cap, Bitcoin up 3.2%, ETH down 1.4%, Cardano still killing it, up 14.7%, and Binance Coin up 10.9%. Looking at the top gainers this week, Avalanche up 169.6%, Audius up 79.9%, Arweave up 78.1%, and Solana up 68.7%. Nice. So what's up with the crypto market? What is it doing, and where are we going? Well, Bitcoin has surged to the $49,000 level at the time of this video, and that $50,000 level will be a pretty big resistance point. We'll have to see where the upcoming week takes us. Zooming out, Bitcoin and Ether are still down about 24% from all-time highs in April. Large cap cryptos like Chainlink and Polkadot are still down about 45% from the all-time highs. And as we get into the mid and small cap cryptos, they're still down around 60% from all-time highs. Assuming this bull cycle will continue to rage on, right now seems like a good time to dollar cost average in. Dollar cost averaging is a simple investment strategy where you decide to invest a certain amount of money at a certain frequency to decrease your exposure to price volatility. An example of dollar cost averaging is if you decide to buy $10 worth of Bitcoin once per week, every Monday, regardless of the price. So as we continue to chop sideways and slightly upwards, if you're investing for the long term, DCA is something to consider. Currently, there is a ton of uncertainty in both the traditional and crypto markets, with Delta variant on the rise, the Northern Hemisphere entering into flu season, inflation fears, imminent supply chain breakdowns as China has zero tolerance for COVID right now, shutting down entire shipping ports for an entire month because of one COVID case. Not even joking. And as much as I hate to say it, all of these horrible things are what caused crypto to pop off last year when the pandemic first started. I'd say two big uncertainties are lingering out there that could be bearish for crypto. One, imposition of new potentially stifling US regulations for crypto, and two, Fed tapering. Paradoxically, both of these uncertainties, depending on how they play out, could actually be the fuel we need to rocket back to all-time highs and ultimately beyond those to the 100K Bitcoin and 10K ETH levels. So let's flesh them out a bit more to understand why. 1. Regulations. Yes, bad regulation could be bad for crypto. Ultimately, I think it would just stifle tech innovation in the US, piss a lot of people off, and cause a dip. But at the end of the day, we need more regulatory clarity. Why? Because we need more money in the ecosystem, and we aren't going to achieve a significant market cap in the space as a whole with just retail and random micro-strategies and grayscales of the world. Something we all know, but at least for me personally, don't keep top of mind, is that there is a ton of institutional interest and demand for crypto. However, due to the lack of regulatory clarity, they're still waiting on the sidelines. And those that aren't waiting on the sidelines, apparently it's taking several months to get compliant. This past Friday, on another YouTube channel I sometimes make a guest appearance on called Crypto Banter, Kevin O'Leary, or also known as Mr. Wonderful, described his company's own journey towards compliance taking over 4 months and that it was quite arduous. He also shared that there are trillions of dollars in institutional money either actively working towards compliance or waiting for more regulatory clarity before jumping in. Either way, it's not a matter of if trillions of dollars worth of institutional money will flood in, it's when trillions of dollars worth of institutional money will flood in. And with the stagnation of Tether's token printer, sure, the market cap it's at now got us to the 64,000 Bitcoin all-time high. but we will need more capital coming into the space to push us beyond to new all-time highs. Moving on, the other uncertainty that at first had the stock markets shaky, but then bullish again, Fed tapering. Fed tapering refers to the Federal Reserve tapering bond purchases. What does this mean? Well, if you've seen previous videos where we talk about monetary policy, basically the Federal Reserve buys bonds from banks in exchange for cash. So the more bonds the Fed buys, the more cash that's in the global financial ecosystem. And the more cash available in the ecosystem, the lower the interest rates to borrow cash. The more cash in the ecosystem, the cheaper it is to borrow money. And when it's easy to borrow money and the money is cheap, people and businesses can generally stay active in the economy and keep the economy functioning in the traditional sense. Because if no one is spending money or taking on debt, then the economy is doing poorly. If money is more freely available, the economy should, for the most part, function normally. However, earlier this week, the Fed warned about their plans to taper bond purchases. So if they stop buying bonds and stop putting cash into the ecosystem, eventually interest rates will increase, meaning it will be more expensive and harder to borrow money. The stock market didn't like that and freaked out a bit because less money in the ecosystem and more expensive loans, especially while still in the midst of a pandemic, is not good for all of these businesses that are used to getting stimmy checks and free money hits now for over a year. But in true traditional Fed fashion, as soon as the stock market shuttered, they changed their tune. Dallas Federal Reserve Chair Robert Kaplan is open to shifting his view on taper if Delta curbs recovery. If Delta curbs recovery. Well, I think we all know that is pretty much a guarantee at this point. Shipping containers used to cost around $1,500, but now China-US container shipping rates sail past $20,000 to record high. Those costs will absolutely be passed on to the consumers and further exacerbate inflation fears as those fears become reality. More press about the vaccine working, not working, booster shots, hospitals overflowing, not enough workers to staff the hospitals. I mean, yeah, it's pretty clear Delta is curbing economic recovery. The market agrees and took Kaplan's openness to shifting the taper timeline as a sign that more stimulus is likely in the future that will keep the stock market propped up. So yes, regulatory clarity and shifting of the taper timeline could keep the crypto bull market raging on. Will we have another significant dip before then though? Personally, I think this pump we've had the last 2 weeks seems unusual and potentially artificial. Yes, crypto markets follow the stock market for the most part and are very susceptible to coordinated whale manipulation. It seems like we had a slight Bitcoin and ETH pump that very quickly transitioned into a micro mini alt season. Typically, we see longer, larger pumps of Bitcoin and ETH that start to flow into large, mid, and then small cap alts over several months. While just the past 2 weeks, we've had a short, stout pump of Bitcoin and ETH that quickly flooded to large and mid cap tokens. Either way, there's a ton of conflicting data around COVID vaccines, and there's even more conflicting data about whether or not the stock market will crash this year, or at least some kind of significant pullback before the holidays. Some analysts think we will chop sideways and stagnate, then slowly start a downward trend. The market, the economy, the world is very unusual right now, so it's hard to tell if we saw the bottom this bull cycle in crypto already. If we do have one more significant pullback, that doesn't necessarily mean it will bring in a new bottom, but it may possibly give us another shot to buy Bitcoin at those 30 and 35K price points. In the meantime, whether we are still in bull trap territory or making our way further into the bull cycle, make sure you are transferring your crypto off of exchanges to hold safely in cold storage hardware wallets. You can scroll down to the description area below to access the correct and official sites of my recommended hardware wallets. BC Vault is my personal favorite. Another option is the Ledger Nano Backup Pack, so scroll down to check them out. Or if you would rather make income from your idle digital assets you're planning to hold for the long term, you can safely earn interest with services provided by BlockFi. With a BlockFi interest account, your cryptocurrency can earn up to 8.6% APY. Interest accrues daily and is paid monthly. There are no hidden fees and no minimum balances. So if you're interested in learning more about BlockFi, you can get up to a $250 Bitcoin bonus when you use the link in the description area, all while supporting the channel. Protecting your ability to generate income so you can buy more crypto is another important thing to consider. So if you'd like to learn more about the advanced technical concepts of blockchain and become a developer in the space, check out Ivan on Tech's Academy. If you use the link below, you can access the Academy at a discounted price, so scroll down to check it out. I've had cash on the sidelines from before the Fed implemented a backstop in case Tether went bust around mid-July, and I'm ready to start DCAing my way back into a new large, mid, and small cap portfolio. And I'll take you guys along on the journey as well, so get ready. Awesome. Well, that was Last Week Crypto with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video and subscribe to my channel for more crypto content. So do you guys think the stock market will crash this year? Do you think we'll have another significant pullback in crypto? Or are we on our way to new all-time highs and beyond? Let me know in the comments below. Be safe out there.